Behind every monetary policy decision lies a story of strategy, data, consumer behavior, and economic impact.
Achieving macroeconomic stability requires sustained vigilance and a proactive monetary policy stance. Our focus must remain on price stability, the planned transition to an inflation targeting framework, and strategies to restore purchasing power and ease economic hardship.
Welcome to Facts Behind the Figures, the program that decodes the data and dissects the decisions shaping our economy. Beyond interest rate shifts to inflation targets, we go behind the headlines, spotlighting the rationale, the stakes, and the signals behind Central Bank of Nigeria's economic policy decisions. Not excluding your views, of course, as we navigate these economic and financial terrains. This is Facts
Behind the Figures.
Insight, analysis, clarity, facts behind the figures, where policy meets perspective.
Hello and good day to you. Welcome to this edition of Facts Behind the Figures. I am Sote Chiebo. On the 21st and 22nd of August 2025, the Central Bank of Nigeria, CBN, held its 301st Monetary Policy MPC meeting. Once again, this gathering provided an opportunity to refine Nigeria's monetary policy stance in response to both domestic and global economic realities. In keeping with its commitment to transparency and public engagement, the bank extended communication beyond the post-meeting press briefing. Using its digital platforms, especially LinkedIn, seeking real-time public sentiment on its policy decisions and economic updates. This program, Facts Behind the Figures, as usual examines how the MPC's latest decisions were received by Nigerians. We will also explore insights from LinkedIn polls, public commentary, and expert analysis to understand the evolving relationship between the bank and the people it serves. Following the 301st MPC meeting, the CBN once again turned to its LinkedIn community, over 62,000 followers, to gauge perceptions. Do you think the CBN is fulfilling its role as a regulator and making policies to improve the economy? That top-performing poll question drew 433 votes. A majority affirmed confidence in the bank's role as a credible regulator, signaling cautious optimism. But the dissenting voices underscore that questions still linger around policy transparency and impact. Other poll highlights include 69% of respondents agreed that CBN's communication is clear and timely. 75% found it engaging and informative. 66% said they understood the MPC decisions. 47% expect the decisions to have a positive economic impact. 35% are neutral, while 18% anticipate a negative effect. Despite strong positives, the data reveals a gap. A third of respondents still struggle to understand the MPC outcomes, and almost 1 in 5 foresee adverse consequences. Recurring public suggestions include: simplify policy communication for non-specialist audiences, expand reach using local languages and informal community channels, link policy decisions to real-life economic outcomes, increase financial literacy among youth and small business owners, maintain continuous two-way dialogue, not just one-off updates. You know, with us, the public voice matters, so let's hit the streets to hear directly from Nigerians.
If you recall, a couple of years back, we've had incidents of banks collapse and what have you. That shows systemic failure. But with what we have now, the current CBN, I think that has given us a kind of a reassurance that we are safe, the economy is safe, we are in capable hands. So that is, a commendable move from CBN. So CBN has been doing a lot. Even for the foreigners, people coming to the country, they can attest to the fact that economy of Nigeria, though it may not be where it's supposed to be, but it's growing.
I believe the CBN knows what they're doing. With improvements here and there, in my field as a media and IT consultant, there's clear evidence that these policies are beginning to stabilize our economy. As an average Nigerian entrepreneur, all I want is a stable market and a stronger naira so that I can plan my marketing, my sales, and restock without fear.
What CBN is doing is to make sure that they ensure that there is no excess liquidity, and also a situation whereby too many currencies are not chasing few goods in terms of inflation. So the policy cut across from the currency to regulating banks to ensure that customers that have excess bank charges are protected after escalating to your banks. If there is no resolution, you can reach out to CBN, and to ensure that you have value for your currency and to ensure that there is no counterfeiting of currency. As you can see, we've not have issue of fake currency has gone on the low, and the issue of frequent bank robbery has come down.
As someone who has worked in the financial sector for over 20 years, I believe CBN is making the right call to comb out inflation and restore confidence in the naira. In banking, stability is what investors, depositors, and intentional partners look out for. By holding firm, the CBN is signaling discipline and seriousness in tackling inflation, which ultimately create a healthier environment for sustainable growth.
All we traders, they are letting us know that if we keep our money in business, we appreciate it, we gain from it. How to use the money, how to maintain the money. So that's what I gained from the program.
The public is calling for clarity and accessibility. Policies that are broken down, explained in familiar language, and delivered through the platforms they use every day. Let us hear from our in-house financial expert, Mr. Enitan Loniron, who in the previous episode emphasized the need for ongoing dialogue between the CBN and all economic stakeholders, stressing that effective communication is an important tool towards achieving a sound policy design.
The global economy has largely sustained a gradual, albeit fragile recovery from half of 2025, although several headwinds persist, largely from US tariff-induced trade uncertainties, geopolitical tensions, and fiscal strains, particularly as global public debt is reaching record levels in recent times. Also, inflation dynamics have diverged across regions. In most advanced economies, for example, inflation is trending towards long-run objectives, although, again, upside risk persists. Whereas, in the case of a lot of smaller emerging economies, particularly those of the sub-Saharan African economies, inflation remains around double digits, driven largely by supply bottlenecks, currency weakness, and domestic cost shocks. As a result, we've seen several major central banks cautiously beginning to commence their monetary policy easing, as we've seen largely in the case of Europe, while others such as the US Federal Reserve maintain a cautious hold stance over the fears of inflation reversals. As a result, the loosening of global financial conditions has largely remained measured, limiting portfolio inflows to emerging markets and keeping risk premium in countries like Nigeria sensitive to domestic reforms. Also, in the commodity markets, we've seen that crude oil prices have trended upward through most of July 2025, largely remains below the budgetary benchmark of $25 per barrel for Nigeria. Also, downside risks include fragilities in the global financial architecture. We've seen escalating trade policy uncertainties, and we've also seen potential demand slowdown and possibly leading to a supply glut from the discipline concerns for among the OPEC plus countries. Domestically, the Nigerian economy also has shown signs of stabilization amid lingering challenges, largely headline inflation, although it has eased to 22.22% in June from 22.97% in May. And in fact, in July, we have seen it ease further to 21.88%, which is quite remarkable. This suggests that consecutive tight monetary policy stance that the central bank has been yielding positive results. However, inflation remains above comfortable environments for the country. Food inflation particularly remains of much concern, as persistent supply pressures in the key agricultural regions is an issue of concern, both monetary and fiscal policy, and effort needs to really go into that direction. Since 2023 also, we've seen that most of the structural reforms that the government has implemented, notably the fuel subsidy removal and the exchange rate liberation, they've been quite painful in the short term, but are gradually restoring market signals and enhancing fiscal transparency. So we've seen improvement in terms of external position for the country. We've seen import compression and export recovery, all helping to stabilize the external sector of the economy and improving external stability for the country. Equally, these measures are also leading to strengthening of foreign exchange reserves, which in recent times has been around 40 billion. And we've seen also the naira trading largely within the 1,500, 1,600 per dollar corridor. These factors have largely reduced exchange rate volatility and improved investor confidence in the Nigerian economy. Equally, on the fiscal side, we've seen that revenue performance has improved significantly, and government's effort to diversify revenue sources to a large extent reducing immediate deficit financing pressure. Although we need to bear in mind also that the public debt remains high and the servicing cost remains an issue of concern. Overall, we can see that the global conditions are less hostile and less volatile, but they remain very challenging. Growth is steadying, inflation is uneven, we see major central banks remain very cautious. Nigeria too is stabilizing, headline inflation is edging lower, the naira is more stable, and reserves are higher. However, to sustain credibility into the long run, we require serious commitment to the reform, staying the course, alignment of fiscal and monetary policy, and to a large extent resolution of supply side bottlenecks. If we are able to maintain these conditions, the second half of 2025 indeed offers a critical window to consolidate on the disinflation trajectory, deepen the FX market repairs that has been conducted, and to a large extent rebuild investor confidence in the Nigerian economy.
As Nigeria navigates inflation control and policy growth, policy success will require close coordination between the monetary authorities, fiscal policymakers, and market actors. Clear, inclusive communication will be key to public buy-in. With the economic landscape shifts, one truth stands out. Policy formulation is only the first step. Its real power lies in public understanding, trust, and participation. Central Bank of Nigeria, communicating for impact.